one of our friends is gone, right? Rather than striking out the new thing, why don't we go through a little bit about these reps and warranties and other things of these things, so that you will have a little better knowledge about the structure. Okay. Actually, later on we are going to concentrate on this one, but I think structure-wise you should know about this SPA and share purchase agreement, SSA. SSA and SPA is basically different in a sense that whether this guy becomes a seller or this guy becomes a seller, but the structure-wise it's the same. Okay, it's almost the same. All right. So let's go through a little bit about the reps and warranties section and see what kind of typical reps and warranties that this in here the company, the issuer gives. First, I say that they are jointly and severally, not only the issuer but the company, but the shareholder, controlling shareholder gives a joint and several representation and warranties. And second, it is given at 2 points of time. If you read it, all right, the company and the controlling shareholder jointly and severally represent and warrant to the investor that the statements contained in the Schedule 4 are correct and true as of the date of this agreement, which is the signing date, right? And will be correct and true as of the closing date, all right? As though made then. Why? Because if this was not true, then I would not have entered into this agreement, the same agreement, on the same terms and conditions, if this were not true. For me to enter into this agreement on this term, these terms and conditions, your representations and warranty need to be true. For me to actually, based on that promise, give you the money and get your share certificate and close the deal means that your same reps and warranties must be true as of this date. Okay? Then it goes on and begin to cover due organization. Sure. I am a due organization. I'm legal entity. I have the power and authority to enter into such an agreement. I will become bound and be responsible and so on and so on. Now I do have the authority because if this type of entering into this type of agreement and requires certain internal approvals like board of directors resolution, right, or shareholder resolution, then I have all obtained it, right? So that I do not have the excuse later on say, we want to renege this deal because we never approved it, or any kind of issues that arises out of those. I represent and warrant that I have the authority and I have the due authorization, right? Basically, the most important part is that as of the closing date, this agreement will become as of this date and as of this date and as of the closing date, this agreement becomes a legal, valid, and binding obligation, meaning it's valid. It's not contrary to law or held by law to be invalid, therefore unenforceable. It's binding upon me, 나를 구속하고, okay? That it is enforceable against me, okay? That's the basic stuff. That's the fundamental stuff. Each of the reps and warranties agreement covenant that I made in this agreement, they will be binding and enforceable on me, okay? no conflict. There is no conflict. For me to enter into a disagreement, I don't need any kind, it will not create any conflict with any other party, whether that's a government or whether that's a private party, will not create any conflict with that. Because sometimes you enter into an agreement with another party, or maybe under a obligation, under some kind of law not to enter into this type of agreement, right, without their approval or without their consent. Okay? And then it gives reps and warranties about capital stock. Because now you are getting 10,000 shares, which is 50, then I have to make the assurance that there is no other stock. There's no other promise to issue stock. Because what you are getting is 50%. But if I am already obligated to issue to another party, I made a promise, or I issued, for example, certain other type of issuance, other type of instrument under which I'm obligated. For example, convertible bonds, CV. Okay. Convertible bond. What's the Korean word for that? 전환 주식. 전환사채. Okay, convertible bond. Meaning that the holder of that instrument is able to convert that into shares. Thereby, my share is no longer 50%. Suddenly, I have another shareholder into the picture. You got no such things. Okay, no bond with warrants, no 신주 인수권부 사채, all right? No exchangeable bond issued or any other thing that obligates me to issue any other shares, okay? There are no employment, for example, stock options. If I am obligated to issue to employees some shares, there are no other undisclosed stuff like that. If you have, then you have to disclose it into the schedule, right? Which means that when it's disclosed, that issue has been taken care of. You are entering into this agreement in reflection of what that disclosure schedule discloses. I understand what it is. I have already reflected. I have already decided, despite the disclosure, to enter into. Again, pay this amount. Okay? So, okay, then approval and consent is all the approval that is required from the government have been obtained. Okay? And the new shares that will be issued, okay, will make you the 50% owner upon the closing. All right? Then it gives you a financial statement. So basically, this financial statement is extremely important because it's based on this document that your financial analysis has been done. When it's audited, then obviously, those accounting firms that audit this financial statement, for them to give you an opinion about the properness of this audit, they need to go through a various type of verification procedures. But if there's a debt of this much, then they check with the bank about, if they say about, okay, this is the legal issue, then they check with the law firm about, they send you this, whenever there's an audit, please disclose whether this dispute is about litigation or something other than, legal dispute. So they go through these independent verification procedures. That's why audit is very important. Audited financial statement often have a lot of notes, where they describe, makes other things, exceptions, qualifications, all other things, right? So they have to say this financial statement is made in accordance with the prevailing accounting rules, which could be GAAP. The companies could use the GAAP generally accepted accounting principles, or, okay, it could use, for example, a lot of companies use KFRS, Korea International Financial Standard. International Financial Standard adopted by Korea. All right? So IFS. All right? So this financial statement is important. It's properly done, properly audited, and then it represents basically fair view of the company. If you turn to page 51, it says in the middle of that first paragraph, the financial statement described in 1 and 2 above have been prepared in accordance with the Korean GAAP. The financial statement described so and so on have been prepared in accordance with KIFRS. So obviously, these are like series of financial statements for several fiscal years, during which time they used to prepare financial statement in accordance with the Korean GAAP, and then changed into different accounting standards, KIFRS. Each of the financial statement described, all of these, above, fairly present, very, very important, fairly present on a basis consistent with the applicable accounting principles as set forth above. The financial position, result of operations, and other financial data of the company to which it relates for the periods ending as of the date hereof. Here, they only gave you the word fairly represent. Oftentimes, from issuer's perspective, this is good enough. But if the draft is done by the purchaser's counsel, it would have a more stricter kind of a representation warranties. The fair means fair, or there might be a little bit of this, but overall it's fair, right? But if it's true and accurate, and if you add those words, it becomes, you understand what I'm talking about, right? So these are the kind of fights that you have, how strict a reps and warranty would be. What would the proper level of reps and warranties, right? But basically, this is important. You could, yeah.
I'm sorry.
Yeah.
Fairly present means it could be somewhat inaccurate.
Yeah, the fairly present means, even if, for example, if there's a typological error, for example, or whatever, if its amount is 5-1 difference, who cares, What if it's 101 difference or 201 difference, right? But if it goes into 100 million, then billion one difference, that's a significant amount. It really depending upon situation, but the word fairly means as long as it gives a fair picture of the company's financial conditions, not dealing with every bit of information that all true and correct, right? However, as I said, there is the de minimis aspect, basket and cap. Even if it's wrong, right? Even if it's strict, still you have this de minimis basket which gives you certain rooms for inaccuracies, right? Okay, it gives you about subsidiary and affiliate, but anyway, that's only if you have some subsidiaries and affiliate. Because when you get 50% interest and there is the subsidiary and affiliates, then it affects obviously how well they are financially doing, and so on will kind of give certain effect. No undisclosed liability is very important. Okay? Except as set forth in the disclosure schedule 4J, the company, forget about the subsidiaries, just let's concentrate on the company. Company do not have liabilities of any nature other than liabilities recorded as liabilities or reserved against in the financial statement pursuant to the accounting principles. Number 2, obligation on the documented contract predating the reference balance sheet date that have been disclosed to the investor. Number 3, liabilities incurred since the reference balance sheet date in the ordinary course of business. So what it's saying is that in the financial statement, audited financial statement can be only been given, right? Let's say this agreement was entered into on September 1st, right? And then there's an audited financial fiscal year ended on December 31st. So the audited financial statement for the last preceding year would have been available sometime during March, right? Right? Okay, so you have this audited financial statement as of this date, right? Okay. And then it might be able to give you before this maybe a balance sheet, okay, disclosing your liability and other things as of the date before this agreement date, but it cannot give you a balance sheet as of September 1st. Why? Because that's the date. In order for the balance sheet to be available, it has to be sometime after that balance sheet date, right? Okay, so now you have available this financial statement, which covers here, previous year, and you have all audited. So audited gives you, and then your reps and warranty covers that there's no other liabilities other than it's disclosed in the audited financial statement. Then from here to there, if it's not disclosed, then you have to disclose those liabilities. If it's not disclosed in the balance sheet, then you have to disclose it in that disclosure agreement. Other than those things, okay, you only have the liabilities incurred in the ordinary course of business. No surprises, in other words, right? That's the kind of wrap that this is giving you. Sometimes, in the seller's draft, they have the stronger things, but if you know the mechanism of what this is like, then you cannot comment on this and you cannot revise it. So it's important to know and compare. For example, pro-seller's version with the pro-buyer's version, and say, and when you compare it, you'd know. Sometimes it's not really. They got more word, but the substance of it would be same. They just say what is implied in more clear wording and so on, but sometimes it's substantively different. When it's substantially different, of course, always revisions can be made to clarify something, right? Clarify what is already implied, but when there's a substantial differences, something that is of substantive difference, then you need to know what that is, and you need to mark that up so that people could negotiate, and you need to advise your client about what this markup is about, make them understand, and make them give and take, basically. Okay, but this is very important. No undisclosed liabilities, because the entire point about these reps and warranties is undisclosed liabilities. If there's liabilities that I know about, okay, there are no hidden liabilities that I am not aware about, because my valuation is based on the liabilities that was disclosed to me. You understand? Okay. Now contracts. So basically on the contracts, you have set of contracts. There's a set of material contract. You need to define what the material contract, because you are not interested in every single contract. There are simple contracts like, like janitor, 쓰레기, kind of services, that are not really of an interest to you. But there are material contract, supply contract. You want to make sure that they are binding. You want to make sure that those contract does not require, due to these changes of structure, it used to have the store control now under a joint control. In this kind of change of control situation, okay, do they have the right to terminate the contract? Right? Do they have right to terminate? Does that contract require their consent? Right? For these changes to occur? So you have to analyze all of it. And if those are required, then you have to ask the seller to go and get such consent. And that becomes a closing condition, right? If you don't get the consent, well, I'm in reliance that this contract continues, but if you don't get the consent, and there's a reasonable probability that this contract gets canceled, then I have to rethink about entering into this transaction or at this price. Okay? So contracts are binding, there's no breaches, okay? On my part, there's no breaches. To my knowledge, there's no breach on the other side, and it's enforceable, and there is no, the right to terminate, Then no material adverse change. I mean, it's another topic that I want to skip this. If there's a material adverse change, it's a definition. You have to define it and you fight it over with a definition of what this is. When something significant happens, then I have right to back out. I have to walk away. I have a walk away right, obviously. So this guy, from seller's perspective, they may not want this, okay? They do not want to give a too much right for the seller to walk out. They want some certain kind of certainty. So it depends on the definition of what material adverse effect would be about. It's very hard to define it. So you usually have to leave it in some vague wording. However, based on the precedent, eventually you have to go to the court or you have to go to the whatever dispute mechanisms in order to interpret. And the governing law, under governing law, what would be the relevant criteria of what is material, so that they can exercise their walkaway right if they want to. Pending and threatened action, there's nothing other than it's disclosed. There's no other pending. Pending means it has been already, dispute has been raised. So it's under court or under arbitration. Claim has been filed. But we are waiting for the result. That's pending. Threatened is no formal steps has been taken. The other guy just is threatening that if you don't do it, I will file an action, whether at the court or at the arbitration, depending on the contract, okay? That compliance with law, this is another broad, cover-all kind of a reps and warranty. Think about it. I have been compliant with law means it would be all kinds of laws, right? Under fair trade section, you again say there's no violation. Under tax section, you say no, there's no violation, etc., specific. But there's these broad kind of languages. I am compliant with all laws, right? So this is a very important kind of a law, reps and warranties. Except as disclosed in this, right? We are not in violation of law. All the approvals, okay? All right? So basically, from the purchaser point of view, you want that to be as broad as possible. You are just basically in full compliance with law. All laws, we don't care, whatever. All applicable law, full compliance, okay? That is what I want. From here, obviously, I want some kind of qualifiers. hey, what about the traffic? Are you interested in traffic violation? You know, you're not certainly not interested in traffic violation by one of our employees driving one of our company cars, right? That's a violation. That guy say, that's okay, just make it full because you will be covered by under this de minimis, right? Right? So, but still, I want to make it full. But still, let's just make it material violation. What is a material violation then? You know, then we begin to fight about what's a material, how do you define material, and so on and so on, right? So this is one of those things that gives you a compliance with law, no undisclosed liability. Think about those major things, you know, how much they could cover, you know. Then there's a tax. You know, you filed all the taxes. There's no liabilities under tax. Then there's a real property. If the company is the real property, I own the title. I have the title. There is no encumbrance, okay, on the real property other than what is disclosed. The personal property, proper title. You know, it's in good order. If it's a equipment, it's you know, it's in a working condition. It can do the things, and so on and so on. Intellectual property too. We got, you know, all this intellectual property that is necessary for the operation of the business as we have done. It's ours. There is no infringement, you know, no claims, infringement, and other things of the intellectual property. Employee matters, yeah, we have complied with all the things. No money is owed, etc., to employees, and so on and so on. Insurance, we have all these insurance companies that are mandated by law. If you go more, then it's proper, you know, in the operation of business, etc., Environment too, you know, we got no violation in the environment matters. We just keep the compliant with environmental law. But even if we do not have this, we still got this general compliance with law provision, right? We're still cover that. So if you happen to get rid of one, if they ask you, you have to get rid of one, then I would keep these broad ones, right? Related party transaction is the fair trade issue, where if you have an affiliate, that has to be conducted in the fair, arm's length transaction. You should not be, you know, extra, you know, giving benefits. You have to do it as if you deal with a third party, right? And so on and so on. Then there's an inventory, product liability, and other things. That depends. If product liability is only of a concern that if you are produce some kind of product. If you are just a service company, then there's no, you know, product liability issue per se. Anyway, okay. So these are the topics that is covered in this particular industry. You know, depending on the specifics of industry, there is other kinds of reps and warranties may be more meaningful, and so on. But you know, these are the matters that cover the general kind of business matters. Okay, so that you know what this is all about, because big chunk of section where they spend most of the time kind of going back and forth in the negotiations. Okay, we'll end here today.